Time for our next corporate interaction. Fedbank Financial Services reported a strong set of earnings in Q3. This was on the back of robust AUM growth and strong disbursements. Anil Kothuri, who is the Managing Director and Chief Executive Officer at Fedfina Services, joins us now to talk about that. Anil, a very good growth in disbursement. It's almost a 24% growth year on year. Is this something that you can sustain in the last quarter of this financial year? And what do you think you could end the year with in terms of disbursement growth?
Good morning. So the last quarter of the year is normally the business end of the year. So that's when activity peaks and there is seasonality. So disbursements increase in the last quarter of the year. So while we did have a robust Q4 in the previous year, I believe that the percentage growth is sustainable for the quarter to come.
Okay, so the percentage growth is sustainable, you're saying. So you can see an excess of around 23-24% growth in disbursements even in Q4. I also wanted to talk about your AUM growth. It was robust, but you also raised funds, right, in the quarter gone by. Can you tell us a little bit about what the reason for that is? And also going forward in FY24 and FY25, what are you looking at as an average AUM growth?
Yeah, we came up with an IPO in the quarter gone by. We raised 600 crores of primary capital. That's used to augment our tier one position. So which is why our debt equity came down from close to 5.5 to almost 3.5 right now. Okay. So that now is ammunition for us. We can lever more and we can pursue growth for the coming, let's say, 2 or 3 years. I believe that an AUM growth of about 25% from here on is sustainable on the base that we have. And that is what we will pursue over the next couple of years.
All right. Hi, Anil. Good morning and good to see you in. So from around this 10,700 crores, in the next 3 years or so, where do you see the AUM number headed? And also, I think there was a credit rating upgrade, in the past quarter. So what does it do to your spreads going ahead?
So yeah, we've received a rating upgrade. Okay, CARE now rates us AA plus. Okay, this is up from AA, and about a year ago, 13 months ago, we were AA minus. So in about 13-14 months, we've got 2 rating upgrades, AA minus to AA, and then on to AA plus. Parallelly, CRISIL has rated us AA positive, which is AA with a positive outlook. So that's a first. All of this happened in the first 10 days of January. Okay. And I believe that this reaffirmation of our strong profile and actually an upgrade will stand us in good stead when it comes to, our borrowing costs. And that's an advantage that we hope that we will carry into the year ahead.
Quantify that? How much has your borrowing costs come down by because of these 2 rating upgrades, and also the AUM number, say in the next 3 years or so, you'll be closer to that vicinity of around 18,000 crores on?
Yeah, so since the rating upgrade is about a week old, we can't yet quantify what there has been no impact so far. But I believe that whether it's borrowing from banks or in the markets, we should see some, benefit in terms of borrowing costs. Now, in terms of AUM growth, yeah, 25% compounding over 3 years should take us beyond the 18,000 crore rupee mark.
All right. Anil, hi, good morning. So this cost of funds could be 100 basis points, right? Roughly. I mean, we've seen this happen with other institutions as well. And over a period of time, it kind of amounts to that much. Would I be wrong in the ballpark?
Well, I hope you're right. But having said that, our costs are currently AA kind of cost of funds. Also, we have the benefit of having a strong parentage. So our cost of borrowing is anyway close to a AA positive kind of cost of borrowing. Okay. So from here on, the gap between us and AAA is about 40 to 50 basis points. And I hope that some bit of it should get bridged in the coming year.
With this. Anil, talk about mortgages a little bit, because that is the segment which has seen the fastest growth, the strongest growth. Will that continue, and what are you doing there, which is allowing you to register this kind of growth?
Yeah, we offer mortgages in 180 branches across the country. We're present in 17 states and union territories. So all these branches have got opened over the past 5 years. In the year gone by, we've opened 50 branches. So we moved from 130 to 180 in terms of branches. So each branch then does something like 1 crore rupee of business every month. And that's how this business builds up. In terms of the market, the segment that we cater to, which is the emerging self-employed customer, is hugely underserved, and demand quite significantly outstrips supply. So that's a gap that we are trying to remedy. So that's the reason we're seeing strong growth in the mortgage business.
Okay. Your asset quality actually quarter on quarter has seen an improvement. Do you expect further improvement in the asset quality? And also, can you give us an outlook on what the credit costs would be for FY25 and by the end of FY24 as well?
So yes, we've had a good quarter as far as asset quality is concerned. Our absolute level of GNPA has declined by about 4-ish%. This is an absolute rupee number terms. But the credit cycle is currently an enabling one, a benign one. So we believe that we should be able to take advantage of that in this quarter and the year ahead. We are comfortable guiding an average credit cost of about 80 basis points on a through the cycle basis. So next year, I think we can go with a number of about 80 basis points.
All right, we'll leave it at that. Thanks a lot for joining in and speaking to CNBC-TV18. That's Fedfina Services talking about their business as well as the way forward.